Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, Bitcoin, volatile as heck. China is getting in on the act. Is the government going to let it keep going? Well, these are all great questions. That's why we need to hear from Jason Burack of Wall Street for Main Street. Jason, it's been a while. Welcome back.
Thanks, Kerry. Glad to be back.
Hey, so a lot of issues coming up on this Bitcoin. The U.S. government has formally recognized its existence, had a congressional hearing, and of course, like most of what the Congress does, a lot of navel gazing and not much else. And what's your thoughts on this?
Well, Congress went through the normal song and dance with Bitcoin and said, it's only for money launderers and drug dealers and criminals, and it's going to be prostitution and drug dealing and all kinds of other criminal stuff. But there's a whole bunch of honest, hardworking. This is the same type of thing they say, with gun ownership. There's responsible people who own guns. There's plenty of responsible online business owners who use Bitcoin. Most of the transactions for Bitcoin are very small ones. They're used to buy an audio book, a research report, digital products, things that are bits that are not that expensive. There's even now a lot of, well, not a lot, but it's growing pretty rapidly, physical stores that, on their iPad and stuff like that you can just scan it and you can buy Bitcoin for a Subway sandwich or a pizza or things like that. And then there's the China news that you mentioned, and Baidu, which is China's Google equivalent, is accepting now Bitcoin on as payment for most of their services online. So those are small amounts of goods and services online, and Congress is just trying to paint it with a broad brush. They're trying to defend the dollar. They do not want demand for Bitcoin increasing very rapidly to the point where it would threaten, the demand for the dollar. Same type of thing that they do, with gold and silver. And I think that's where things are going. Is that I think Congress is good, or the other government agencies. The government agencies carry, all the banking and finance ones. They've been aware of Bitcoin for over a year. So they've been publishing research reports on it. The ECB published a research report on Bitcoin about 8 months ago, and they've been aware of it, but they haven't put any draconian legislation in place, like a punitive windfall profits tax or anything like that yet. I think that could be coming down the line. We spoke about this offhand, some of the different ways the government could go after Bitcoin. Due to its decentralization, they're going to have some issues, getting the head of Bitcoin like they did with eGold or Liberty Reserve, which were the predecessors to Bitcoin. They're going to have some tremendous issues getting the guys who created Bitcoin, throwing them in prison for life and fining them $10 million or things like this for money laundering and things. They're not going to be able to do that. So they're going to have to come up with a different set of ways to attack Bitcoin and prevent it.
Yeah, obviously makes it real difficult. And also to tax it, it's not like Bitcoin.com is going to send out 1099s at the end of the year saying how much you paid for your Bitcoin and how much you sold it for. And plus, it's a currency. So how do you do that?
I honestly don't really know how they're going to be able to do it. I think it's going to start with the IRS. If I had to venture a guess, the Department of Treasury, the IRS, is going to make it required that if you buy Bitcoin that you declare ownership of it. So it's going to be like gold or silver, that you're going to have to declare that every year in your tax form. You may not pay taxes on your gold or silver because you're not selling it, but you're going to have to declare that in the United States, I hold this amount of gold or silver. I think it's going to be the same way for Bitcoin, just so that way they have an idea that they can start in their IRS file that they built on you in the NSA or IRS or wherever they store this data. And it's going to say, so-and-so, he owned 20 Bitcoins last year, and now he owns, 10,000 Bitcoins. And, now, the year after, then it dropped to 0 Bitcoins. How come we didn't get our tax bill on this or something like that? I think that's the way it's going. Government tends to be really, really slow, in its policy decisions. But I'd say within the next 3 years, there's going to be some potentially draconian tax laws on Bitcoin, in my opinion.
Yeah, well, I think my feeling is they'll find another way to destroy it, but that remains yet to be seen. I mean, look, what are they doing here with gold and silver right now, Jason?
Oh man, they've just demolished it. Longtime bulls, people, the sentiment levels, Kerry, are. I was buying some gold and silver stocks after the 2008 crash. I started following the market in 2007, so I started learning everything I could because things were just not doing the mainstream media, the stuff they were telling me. It just didn't make any sense, and then the market crashed in 2008, and the explanation that they gave for it was just ridiculous. And I was like, someone had to know this. And then I found, Austrian School of Economics at Gold and Silver. And I was just studying the sentiment levels then. And as a contrarian, I bought a lot of stocks after 2008 market crash, like general stocks like Apple, and then also gold and silver stocks. And I made really huge profits. But I'm seeing even worse sentiment levels now than after the 2008 crash. And there's a lot of longtime bulls, unfortunately, Kerry, who are just giving up. People who are, I even saw today someone, a high net worth friend of mine, and he's selling all of his metal. And he's like, he's just putting it into cash flow, real estate properties or stuff like that, because he's just fed up. And I think that's the whole point of all this. There are people who want the metal too, who are going to be scooping up all of this metal, because look at what's happened with GLD. And GLD is it's down more. They've taken out more than 30% of all the holdings in GLD. So that was one of the main points of all this manipulation, was they couldn't get the gold from anywhere else, and they had to clean it out from GLD. And the best way to do that was to knock the price down. And they don't even have to spend every day manipulating it, because once it goes through or it doesn't break out of key overhead resistance levels, it stops. It has a false breakout, or it breaks through a key support level. The trend trading hedge funds, the algorithms, the Wall Street guys who are chasing, all the fast money, who have billions of dollars, they'll do the rest. They'll take a look at the chart. They don't care if a market's manipulated. They don't care. They're looking to make every single dollar. And right now, the chart on gold is extremely, extremely bad. I'd say we're probably almost definitely going to retest 1180 now. I didn't think that was the case a couple months ago, but sentiment has changed even again. There's been even more false breakouts, and the stuff that's going on in India trying to prevent people from buying it, and the demand that's coming from China, the fundamentals are just not offsetting how bad the chart is. So the people with capital, the billions of dollars here in the Western world, they hate the chart. They're going to keep shorting it as much as they can. I've heard some really laughable comments about some of the gold stocks. Some of these guys think that profitable gold companies who are still making money at these levels with no debt, some of these guys think that all of them are going bankrupt. So I definitely don't think that's the case. And, if people are willing to think 3 to 5 years from now, I think if they buy the best gold and silver companies with the best balance sheets, and this is a stock picker's market, you have to be very, very careful. You have to understand balance sheets, production costs, how much debt they have, things like this. And if you do that and you buy the best of the breed, you will make at least 5 times your money in 3 to 5 years, probably more likely 10 times your money on a profitable company. And there's some companies right now with like a under 2% dividend, like a Gold Corp, which is barely above $20 a share, and you're getting paid a yield to weight. They're still pretty. They have a pretty low cost mines. Those are the types of companies that people should be buying. They should not be buying those junior explorers right now.
Yeah, that seems to be like suicidal, but it's just remarkable that they could control the market to this extent. And look at the way the inventories on the COMEX are going down, and in GLD, and it doesn't seem to affect their ability to control the prices.
Exactly. The paper derivatives market is really just overwhelming the physical market right now. But I think this will end, Kerry. I would be surprised. I think this will all end in less than 12 months. I said earlier in the year, around March, in another interview, that this could not last more than 12 to 18 months. I would be surprised if it even lasted from the March timeframe that I gave that I named for even 12 months more, because the miners cannot withstand this anymore. And for the whole manipulation scheme to work, the miners have to keep bringing more physical metal out of the earth and into the selling stuff. Because a lot of the above ground, so there's no real stockpile of above ground silver. A lot of it's consumed for industry. The only real above ground stockpile is in SLV. But a lot of the above ground gold is already spoken for. A lot of it's in central bank vaults or in private hands in China or India. And a lot of those people just don't want to sell. So this is getting to the point where they're going to bankrupt a lot of the miners. It's going to be an unintended consequence. And then once the producing miners cut back on production drastically, they're already not reinvesting in any, future supply. Their exploration budgets are zero. They're not making future investments really in anything for the most part, and they're hoarding cash, and they're trying to pay down debt like crazy. And eventually, though, if they do take the price down to 1180 or lower, God forbid, for the miners' sake, you are going to see bankruptcies. You're going to see supply shut off. You're going to see unexpected bankruptcies, and then that's going to be it. The manipulation scheme I don't know if the manipulation will end permanently, but the manipulation will end at these prices because it will not be sustainable. So you will have to have, $30, $40, $50 an ounce silver then, because no one then will make any investments into any future production then until the silver price is way higher.
Wow. That's pretty amazing that we could get into this situation. And I guess then we should talk about energy. So we'll talk about that up next on the financialsurvivalnetwork.com, 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
We're back with Jason Burack on the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. What about the energy outlook, Jason? I mean, we're around $94 the barrel right now. Still a very favorable price, a little bit higher, obviously, the Brent crude price over $100, 104 or 5. What's the Brent crude price right now? Not on my app right now. In Europe,
it was around 109. It's just under 110. So there's about a $14 spread between WTI and Brent. So the spread is really good. For if you remember, Kerry, a few years ago, WTI actually used to sell for more than Brent. But because of the shale oil revolution and some of the other things that have gone on in the market, like I think there's a lot of paper money that's printed from global central banks that's parked in the Brent price instead of WTI. And the spread is really good for the refiners. The refiners have been a hated business here in the United States. The EPA doesn't allow any new refiners to be built. I believe there hasn't been a new new separate site refinery built since the 70s, although you're allowed to upgrade an existing refinery, but then you're looking at years of permitting, billions of dollar environmental studies, et cetera, et cetera. The costs on those are still very prohibitive. But the refiners are actually minting money right now because they can get that cheaper Bakken crude or Permian Basin crude or Eagle Ford Shale light sweet crude, and then they can export it as a finished petroleum product to foreign markets for the Brent price. So the refiners are in a pretty good sweet spot right now, and the shale oil producers the stocks are like, I don't want to say they're in a bubble, but they're pricing in a lot of the fundamental stuff that they have from the production growth. I don't know how much more easy money there is because some of them have already gone up hundreds of percent in the last couple of years. I was buying Kodiak oil and gas in 2009 at $2 a share, and it's around 12 now. So I just don't know how much more upside there is in terms of that. If you should be chasing prices after you already have that large of a move. But it's really good for the U.S. real economy. This has surprised a lot of people, and it's creating jobs. There's infrastructure jobs. There's the multiplier effect because it's like building a factory, with the shale oil production stuff. So it's like building a factory, and then there's restaurants and all those other things around the town too.
Well, we got Dr. Frackenstein coming up actually live in the studio later today. He's got some exciting news because there's a new shale formation that is causing drillers to pull up from North Dakota and move down to Oklahoma. It's called the Oklahoma Slip. He's actually going to start working there. They're paying him more to work there than North Dakota. The weather's better in Oklahoma. He just got back from North Dakota. It was nice, 3 degrees below zero when he left. And he also told me a couple other items. You're going to really find this interesting because here's the thing. When you're not actually out there in the field, the technology is moving so fast, Jason, that really hard to keep track of. And what he told me is some new technology recently emerged that is enabling them to get about 30% more per hole drilled, because what happens is using sand and stuff to keep the fractures open to get the oil out. That's what fracking is, hydraulic fracturing, and eventually those fractures close up, hence the flow of oil is choked off. And what he said is there's some new technology they're using, and they're getting 30% more for each hole that they're drilling, for each well. Okay, so that's interesting. The other thing is that California passed a new fracking law, and imagine if you threw a party and nobody showed up. Nobody trusts California. No oil company that doesn't already have operations there. Nobody is willing to take the risk, spend the billions of dollars in capital necessary to actually go out and drill holes in the ground and risk the environmental wackos coming there and shutting them down. And they're begging oil companies, please, 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 we got this beautiful shale, come drill here, and nobody will do it. Plus the taxes in California are through the roof.
Exactly.
And they won't drill there. Like they're just saying, no, we're not ready. So I'll make a prediction here. You heard it here first on FSN. Eventually, California will have to pay the oil companies to come drill there. That's what's going to be the eventual result of all of their business policies. The only way they'll be able to do it is to get the oil companies to come drill is to pay them one way or the other, either through taxes, rebates, subsidies, tax credits, or just outright gifts of cash. That is the only way they'll be able to do it.
Yeah, that makes sense. And from what I heard about California, and I've followed this kind of closely with California because there's actually like an algae cleanup company that actually improves the recovery rate of the oil that's in the frack water. It pulls a lot of the oil out, 10% increase. And it also cleans the water well. And they're looking, the California shale oil play there, the Monterey Shale, they actually want them to get an exclusive contract there. They have humongous amounts of environmental restrictions there that will increase the price at least $10 per barrel more. And then there's the additional royalties and taxes and stuff there. So that's why the oil companies don't want to do that right now. So there's just too many hurdles right now. Either they're going to have to do a rebate or they're going to have to cut out some of the other stuff. And, with the amount of environmentalists in California, it's going to be difficult to get them to do it, even if the state is bankrupt, because, they can still get a lot of the rich people there to pay a little extra for right now. That's what they've been doing with the property taxes and the extra taxes. They've just been soaking the rich, like what France was doing. Mm-hmm. And the people, the real, the movie stars and those people, they don't mind paying a little extra to live the Hollywood lifestyle and stuff like that. But the actual business people are leaving because you've seen, Apple and some of these other guys start to build factories out of California and start moving their headquarters out. They're moving their factories either southern states or they're moving their headquarters to Nevada or Arizona or Texas. But the really rich, the snobs, the people who are hypocrites, like the Hollywood actors and stuff like that, those people with a lot of capital who are not necessarily, business people, they don't mind paying the little extra taxes. And until those people leave, I think California is going to be able to get away with a lot of what it's still been doing. But California probably will be the first state to experience a tremendous bond problem with its auctions there.
Yeah, I mean, look, Michigan is looking better than California. Illinois, well, it's kind of a race to the bottom between Illinois and California,
Yeah, unfortunately, yes. And, you look at the Chicago politics and all the other stuff going on. I mean, Illinois has a lot of capitalism there in a certain amount of area in Chicago. You got the futures exchanges there, the options exchanges. You have the commodities exchange there, the CME group. Mm-hmm. There's capitalists there, but there's been a lot of government people there who have just been taking more and more every single year from the capitalists in their markets, and those people make more money each year from trading and stuff like that, so they don't mind paying a little more, but eventually they're going to say enough too, and they're probably going to move and get out of there, because that's what you've seen in New York. There used to be all the finance people, all the hedge fund managers used to only be in New York, but now they've left, because you can do that from almost anywhere now. You can do it from Florida, you can do it from wherever, because of the internet and how well your internet connection is and stuff like that. You don't have to trade in New York City next to the exchange anymore, unless you're like one of those high frequency trading that's trying to front run the retail market.
And in fact, Jason, might not be aware, but there has been a huge torrent of hedge funds moving down to Palm Beach County. No state income tax, and Class A office space goes for $20 a foot. And what they do is they say, oh, we're going to open a branch office in Palm Beach County, and they set up this so-called branch office, and then it becomes a creep. They move a few more people, and then all of a sudden down the road, New York will be the branch office, and then they'll say, we don't need that New York office. And that's what's going to happen here, and Connecticut and New Jersey, where there's hedge funds as well. Eventually, they'll all be down here in Florida. You can be sure. And Florida hasn't even actively been raiding them. It's not like Texas going to all these high-tax states and Rick Perry just kicking sand in their faces. Florida's been very stealthy about it. But trust me, I know people in the real estate business down here, and they're telling me that the trend is happening. And then the heads of these hedge funds say, I'll have a nice little winter place in Palm Beach, and they buy these 10, 20, $30 million homes here, and then all of a sudden they become their year-round residences. And the trend is happening. There's nothing that's going to stop it short of these high-tax states becoming low-tax states, and you know that there's no possible way that's going to happen until bankruptcy occurs.
Exactly. Detroit could have stopped this problems a long time ago. They were bankrupt 5 or 6 years ago. They could have stopped things a lot sooner. They ran things completely into the ground. France is doing the same thing right now, and I have no doubt that California and these other high-tax states are going to do everything stupid first, just like the U.S. federal government is doing everything stupid first, before they do the quote-unquote right thing, the free market thing, where people have freedom and low taxes, and they'll actually start making sound investments into the private sector instead of all this money, going to banks and hedge funds where they're trading pieces of paper back and forth, and it's not really creating any jobs. The economy needs to get back to a low tax incentive, proper incentive. So instead of penalizing people for growing their income or making investments.
Our friend Tom Dyson at the Palm Beach Letter is giving away free copies of a really cool report he put together called How to Protect Yourself from America's New Secret Police. Inside, you'll learn all sorts of simple, everyday tricks you can use to make yourself a little less visible and vulnerable to scammers, hackers, and even the federal government. For instance, inside Tom's report, you'll learn which free internet email service never to use. This company doesn't care if your account gets hacked or not, or things the government must tell you if they request your social security number, and how to spot skimmers lying in wait on ATMs and gas pumps, and much, much more. These tricks and secrets are low-hanging fruit ideas. You don't have to invest time or much money into them. Most are free. But by taking some basic measures, you can make your privacy much harder to invade than your neighbors. Tom's report is available for a limited time to listeners who take a trial subscription to his newsletter. Just visit the Financial Survival Network homepage for more information, or go to www.palmbeachletter2.com. That's www.palmbeachletter2.com.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.